Yes, 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 yes. What's going on, YouTube? Oh, hold on.
Mass troops on the border of Ukraine, Biden spoke directly this week to Putin, the Ukrainian president, and neighboring states to head off a Russian invasion. The question now, is there anything the West can do to prevent Putin from moving in? Martha Raddatz and former U.S. Ambassador to Ukraine William Taylor are standing by to analyze after this report from senior foreign correspondent Ian Pannell on the front line.
Diplomats sending a direct warning to Russia. If you invade Ukraine, there will be severe costs and consequences. Secretary of State Tony Blinken meeting face-to-face with the Russian Foreign Minister Sergei Lavrov today in Sweden. The meeting comes as Russia masses troops along the Ukrainian border. More than 90,000 troops, according to the Ukrainians. This is video of a Russian military drill near the border this week. Moscow denies it.
Denies. Yes, 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 yes. What's going on, man? Always remember, whatever you think about comes about. Whatever you focus on grows. So we got fear. A little fear. No, we're not selling and running. So on the screen right now, we got the Dow Jones Industrial Average. What we got? We got 200 on Instagram. We almost got 100 on YouTube. That's not bad. That's enough for a class. Bible says where two or more are gathered, there's power. That's the beautiful thing about the money flow. Money flow is about trying to make order out of chaos. And market is chaos. And that input. So what I just played for you about Russia invading the Ukraine, how does that make you feel about stocks? Now, some people, it could be a real concern. Some people may react to that. People you don't even know, somewhere else in a room somewhere, at a computer, when that happens, could have a reaction. And you got to ask yourself, are you going to react because they react? Do you even know what you're reacting to? That's how the markets work, though. Maybe that's good for stocks. Right? I could probably make a case for why a good war, that sells a lot of shit. Be good for Raytheon. Be good for Palantir. There's a lot of agencies that would benefit from conflict. They make money because of chaos. That's how they make money. The television makes money because of chaos. Yeah. That's how Discord works, too. All these little channels and Twitter handles and all this shit. It's all the same thing, man. Fear and greed. Drama moves markets. And the markets swing. So look at this right here. This is the Dow Jones. I want you to think about something. On that day right there, and on this day over here, and on this day over here, what changed for you at work? Did you come into work and they said, did you see the Dow Jones? And they start making changes at work? No. Traders do that, though. It's coming at you fast every day. You got to try to make sense of that. The problem is you're going to filter it through your brain. You're going to filter it through your experience, where you live, the things you know, what you thought about. And it's usually mixed up with the other inputs that you put into your head. And based on that, you formulate some fucking plan that you're going to do. Or no plan at all. Most people have a no plan. Most people are not thinking about this in money. So you remember a couple months ago, I was like, okay, it's time to focus on Christmas trades. Why? Because all the Christmas stocks were in stage one. They had sold off. And so as students or followers of the money flow, it's You're trying to flow with the whole market and watch the money flow in and out. Not one sector, not just crypto stocks, not just weed stocks, not just biotechs, not just growth stocks, not just bonds, not just ETFs, not ETNs, not just REITs, not just business development companies, not just closed-end funds. The whole thing. And that's the flow. Money flowing in, money flowing out. So nothing changed for you at work here or here. You only got emotional about any of this is because you watch it. People who don't watch it don't get emotional about it, just so you know. Like if your friends at work who don't watch stock market, they don't get near as upset about it as you do. Why? Because they don't have anything in it, right? And so this is thousands, if not millions of human beings all putting their money in. And what the money flow tries to do is just to gauge that reaction. And they don't keep the same frame of mind all the time. They're constantly taking in inputs. So each one of these little bars is one day. But it's one day of emotion, man. Look at this day right here. I mean, that's fucking billions and billions and billions and billions and billions and billions of dollars to take this up. That big. That's emotions, man. That's money pushes this up. This is the Dow Jones Industrial. This is the composite average of 30 stocks that make up the Dow Jones. You should know what those are too, by the way. If you're in the congregation, if you actually give a shit about making money in the stock market, you should know what stocks are in the Dow 30, okay? Long before you start swapping and spitting and kissing girls that smoke. Long before that, you should know this. There are 30 stocks that make up this. Some of them are tech stocks, some of them are banking stocks, some of them are what? Industrial stocks, some of them are what? What are they? It matters. It matters, man. So what the money flow does is watch this movement of price and just fully expect it. I don't know if you know this, stocks go down. So I get weirded out by people who get weirded out by stocks going down because they go fucking down all the time. This is not something new. This didn't just start when you decided to come in. Look, it goes down a lot. Look. And we can just keep going back all the way for 200 years. Goes down, back up. Down, back up. Down, back up. Down, back up. What do you think it's going to do in the future? Now, you may say, well, yeah, no shit. No. Sit on that, man. Think on that for a second. So once you know what I know, that they go up and they go down and they go up and they go down, when you meet people who are freaked out by them going down, you don't know how to talk to this person because they go down, man. Look at history. Run these charts back, man. Welcome to the market. And that volatility, these stage ones are what allow us, right, to buy low and sell high. And that's what these indicators are about. So the money flow uses 6 components, a checklist of 6 things. 6 things that if you check off that list, that's probably what it's doing. It's probably what it's doing. And that's to the top and the bottom. High and low. Meaning as price drops, it can drop too far. And often you'll find this where price has memory and it's drawn back to itself and it just stops where it stopped before. Then it goes back and then it stops. Stop where it stopped before. And then it comes in and it stops. And they call that support and resistance. And you can find a million books on that. Just go to Amazon, type it in. It's not a confusing subject. It's very fucking simple. You just take a crayon. You could be in 3rd grade and you can find them little ones here. See what I'm saying? Like it's where prices hit the same price and stopped. You can find them all over the place. And it's not perfect science. And they're constantly being rewritten and redrawn. The prices, this is organic, man. So on this day here, if you weren't bullish, I don't know what to say, because all the evidence is bullish. Anything else, we've just made that up in our mind. We've taken all the data in all of the world, and we've decided, I know what 20 million people are going to do on Monday. I know how they're going to react. Wait, I don't know the future, but somehow I know. See, if Russia is invaded Ukraine, that fucks up everybody's plan they had. All the economists and everything they laid out, none of that ever works. If you could just think about the stock market, just sit back and just think and go, okay, well, I think blah, blah, you'll be a billionaire. Very easily. You get what I'm saying? Now we can use that a little. You might make that one of your 6 things you look at, but it ain't because you're going to be so smart. You just think the market out. Come on. You wouldn't have a job right now. You'd be a billionaire, or you'd be getting paid by Goldman Sachs. So once I settled that, these are all things that I've settled with myself. Mark goes up, mark goes down. That's totally normal. There's nothing different about this day and this day other than the market went up, the market went down. Guess what? Monday, oh wait, now we're going back up. And guess what? We'll probably stop, and guess what could happen? The market could go down. And yet, if you back up and look at this, watch. It looks like it kind of just slowly goes higher. Isn't that weird? And yet, that price and that price is not very far apart. It's about 800 Dow points. And that was October, November. Now we're in December. And in 3 months, it went 800 Dow points. Or did it? Well, actually, it went way up here, right? And then way down here. And everyone had all kinds of stupid opinions in here. But none of them matter. It goes where price had went before, and then what? It stops. And as I began to watch price, that's what it would do, man. It would run up. And here's the thing, not 100%, but enough that I could trade it. I could get an edge. I could remove my emotions. I could if I believed, now watch this. What if I believed that over time, the Dow Jones just goes higher? Once it does, and I'm skipping ahead, but I found this pattern that I would watch the way it would move. It would go sideways, and it would run up, and it would go sideways, and it would run down. And when I first saw this, it was a guy named Stan Weinstein who really was making it popular, but he did it on a weekly chart. And he had like a 30, I think it was a 30 or 20. It wasn't a 20, I don't think. I think it was 30. Anyway, it's a weekly thing, and I realized that's too far out, man. For what he was doing, it worked, because his trigger, as I call it in the money flow book, his reason for buying, the moment of conception, so to speak, that says this is now a stage 1 buy, this is a stage 2 breakout. Everything else I don't want to fuck with. I'm looking for 1 and 2. That's what I'm looking for. I want to sell 3s, and I might want to sell 4s. Depends on the situation. Am I position trading? Am I swings? If I'm swing trading, I don't ride stage 4s down. But you got to know what that means. That means you get stopped out. And you can't be surprised that prices went down. Hello. It's been doing it since 1854. So if you get emotional or upset or concerned about this, you understand, like, it does this. It goes all the way back to 1850. It's not going to change for you. It won't change. It doesn't care. It's just going to move. And look, higher highs. This goes to 1850, like it just goes back and back and back and back and back. Nobody can argue with that. Nobody. They can't. And you can go look at it on a price line. It's not just a thing. Now, inside of that, not every stock has made it. So when you step out of the index and you step into the world of stocks, now what? Not only do you have to have technicals, but you need to also make sure you're buying something that's actually valuable, that it's actually an asset, that it actually makes money, That's what stocks are supposed to do, make money or be in the process of making money. And maybe something else helps us value it, not just money. Maybe it's seats. Maybe it's square footage. Maybe it's how many people bought a ticket. Maybe it's how many people rented a room. Maybe it's how many people took a ride. How many new subscribers. How many people fucking clicked. I don't know. Everything is valued differently. Bitcoin is valued differently than bonds. Bonds have intrinsic value attached to the company. And you can sit down and if you went to school, you can run some basic numbers and boom, there you go. Real estate, very fucking simple math. I just did 3 videos, very simple. Very simple math, not complicated. You just got to want to know it. It's like 8th grade math. Trading is 8th grade. And so as I look at this, I'm looking for this pattern. And I begin to see it flow on charts and stocks. Not perfect. Now, this is an index, and you can see it. You put it on here with certain stocks. Let's think, let's just look at. Let's see. What am I looking for? Let's find something good. Oof, big down. Dude, you can still see it in that. That big drop. That's another lesson. We'll come back to this chart. Let's look at oil. Look at oil. Now, there's no moving averages on here. These are just bars, just days. I want you to see some. Up, down, up, down, up, down, up, down, up, down, up, down. Is there any reason to ever be surprised by downs? No. Look over here. Down, 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 up, wait, down, up, 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 down. So would it shock you if it ever went down again? No, that's what it does, right? You go look. This is what oil does. It runs. It'll go down, right? And it go. Look at this support. It goes sideways. And as you start drawing this, like as a 3rd grader, nothing complicated. What do you start to see emerge? Right? You start drawing this. I mean, just simple drawing too. Not even that complicated. And if you don't notice, it looks a lot like this. I mean, look at it. So whenever I look at a stock and someone says, what do you think? This is what I see. And I don't know what I think. Depends on what your point is. What are you trying to do? Are you accumulating this asset? Well, if you're accumulating it, I'd probably like to buy the lows, not the highs. That's just me. I like to buy shit cheap, sell it for more expensive. Some people don't like to do that. They like to buy it high and panic when it sells off and sell it and then miss out on the breakout. When it runs up, think about buying it again. I've watched people do that with Bitcoin. Buy it way up here. It turns. They get out of it. It comes down here. They don't buy it now because they think for sure it's going to go lower. Then it breaks out and runs, and then they're looking at buying it back up here again. Doing the exact fucking opposite of this. You know, like they're doing the opposite. That's emotions, man. So we have to be able to look at, that's what the chart gives us. It opens an eye and window to the soul of the stock, man, or of the index, or of the entire market. You get to see what it's really feeling. And it can't happen in one day, and nobody knows where it's going. All we can do is see the map and the pattern. And I just fully expect it to drift sideways, run up, drift sideways, pull back. And you say, well, how do you know it's the bottom? I don't. I'm just looking for a little old box. And I'm looking for some support, and I'm tracking the bottoms. So right now, that's the lowest low of this leg down, right? So price comes down, and the low is right there. That's the low. There is no lower, right? So as I watch the money flow, I'm watching this. And I'm like, all right, I don't know how long a stage 4 is going to last. I don't know how long a stage 2 is going to last. Now, I can insert fundamentals into this and then say, let's say this is a stock and it's worth $160. Well, we could agree that if it goes into a stage 4 decline, it's getting more undervalued, right? That doesn't necessarily mean we want to own it. Maybe you want to short it. I don't know. But what I'm saying is, let's pretend that the true value really is 125. Meaning the lower this goes, the better the opportunity when it does stop, right? And then go back up. In other words, sometimes the lower they go, the more money you can make. You say, what do you mean? Well, tell me. Did you make more because it went down here? Right? Then over here? Yeah. But the guy that bought it over here, he may not necessarily feel that way, right? This is all relative, man. Obviously. So if a guy bought it here, he's not liking it here. But why can he not like it here and I think, oh shit, I like this? Why? He's looking at, what side of the pattern did he get on? So if he's buying in stage 3, now he's not really digging stage 1 because look at the big pullback, right? But if you know this how it runs, and let's say you're accumulating, or let's say you're trading. If you're swing trading, you're going to get out on the stage 4, step aside. You let it go down. When you get back in, when it does a stage 1. So then all we have to do is realize if price moves in these stages of sideways, up, sideways. Now, a stage 1 and 3 is exactly the same. They're no different. Look, this is an upside down bottom. Meaning if I flip this chart around, that's the bottom. And over here, look, if we flip this around, that would be what? A reversal candle at the top. Meaning we could just flip the chart. If you didn't know what it was and I just flipped it, then you'd be like, yeah, that's a good buy, or that's a good bottom right there. And the breakout would have came over here, right? Well, we're flipping it. It's just the same. Stage 1 is a stage 3. The only difference, the only reason we call it as a 3 is it's coming off of a big move up. But that doesn't necessarily mean it has to go down. And so even within the money flow and within our indicators, oscillators like the RSI, this is an oscillator, they call it. And we generically call these things all indicators, but even within indicators, there's different kinds of indicators. This here is the relative strength index. This measures 14 days of price movement. It's just looking at velocity. And so what I have to do is trust this. Part of the money flow is just trusting some shit to be true. And you say, well, what if it isn't? I don't know what to tell you. Part of a religion that makes it powerful is we just believe it. And you say, well, how do you know it's true? I don't know. You got to decide that for yourself. Nobody can prove with science which one's right. So we make our own choices. Creating a trading system is you putting together a series of things. Now, the money flow is comprised of 6 key elements, 6 points, 6 checklists, whatever you want to call it. I'm looking at 6 things. One of them is this RSI. And what I'm most concerned with is the extremes. Price above 70 and price below 30. Everything in the middle, I'm not that concerned with. Really not. I'm looking for extremes. Why? Because it tends to give me the tops and the bottoms. What would that do? Well, if I'm trying to accumulate, I like to buy cheap before it goes up. Meaning I like it to finish going down and then stop. And give me at least some indication that it's going over. So when you hear someone say don't buy a falling knife, that's advice. Kind of makes sense. Don't let acronyms run your life. I hear people, oh, cash is trash. Not when you need money. That's the dumbest thing with cash is. What the fuck does that even mean? Now, I know what they mean. They're like, oh, you should be invested. Okay. But it's far from trash, It allows me to buy assets. Lets me buy pizza. I don't those are weird. That's a weird one. It's always been a weird one to me. I need cash to buy more Uber. So this price moving is all emotion. It's all emotion. That's all it is. Fear and greed. And it plays out on a micro level. If we drop down to a 5-minute chart, a 10-minute chart, it's fear and greed. And it's price swings from extremes. And so while not knowing the next high or low, I always want to be identifying the highs and lows. And even without drawing all the trend lines and all that, just to connect them. And I fully anticipate this one goes this way. And where's the next low? Right there, right? So where are we expecting it to go? It's going to go back up. Where's it going to go? Where it was before, right? This is where it stopped before. That pattern that I just described right there is what sets up what's known the swing trade. The swing trade is a door swinging open, swings, hence the term swing trade. Not like you and your girlfriend swapping with your friends. That's different. That's swing. This is swing trading, and it catches a move and then it swings up or it swings down. And once the swing is complete, it's over. So if you're a swinger, you get in and you get out. Here's where you run afoul when you start swing trading. All of a sudden, you're not swing trading. You were swing trading. Now you're just going to hold it till the price comes back. Well, now you're not swing trading. And that sets in uncertainty and confusion. And that's where fear comes from. Now what you're doing is position trading, but you thought you were swing trading. And because you're unclear of what you're doing, and now it's moved against you, what? Now you're confused. And so every stock, of every purchase, of everything we make, what we really want to do is, who is my buyer? Think about that. And if you say, no buyer, I don't want to sell it. Good. That changes how we're going to run this. See, this doesn't change whether you're a day trader, momentum breakout trader. There's your momentum breakout. If you're day trading, you're probably trading most of the time inside these stage 2s, or you're shorting inside of stage 4s. And if you catch a long sustained down move and you're a short seller, you have to capitalize and make all your money that way, because it ain't going to stay that way. Guess what it's going to do? It's going to turn, it's going to go sideways, and then it's going to break back out. That's what it does. Long before you got here, people would get nervous, sell their shit, and then not get nervous and buy it all back. And these things would just move through fear and greed. And the story changes all the time. Bird flu, mad cow disease, fucking swine flu. Oh, corona. There'll be more. We had them before you guys got here. Before most of you were trading, we had these viruses. In my first book, You Don't Have to Die Broke, I actually had it in a chapter in the first edition where it said a virus from China could cause AT&T to drop big time. And I wrote that. I got that from Warren Buffett. I saw a video where he said that one day, and I put it in my book. And one day I read it, and I said, I don't know why, but I took it out. Should have left it. And that's what happened. I mean, that's random shit, man. Random shit. Random things. Random things can happen, and the market can turn just like that. Just like that, right? So if you're a swing trader, you get stopped out. That's it. You're out. If you're a day trader, you're probably going to close it out or get stopped out. That's the rules, right? If you're position trading, you got to ride the volatility. This is what we live for. We need it to go lower to make our money, because we want to buy low and sell high. And we're playing the time game. That, remember what I showed you even on this one? Look. Over here, over there, look, over there. What is happening? Just the natural momentum, valuable things over time just drift higher and higher and higher. And sometimes they run up and they run down, but the general direction is higher and higher and higher. And we can run that on Apple. We can run that on Ethereum. We can put that on Bitcoin. We can put that on anything that trades where human beings use their brains, motions. Look at Bitcoin. Doesn't that look weird? Look at this. Look at this pattern. Doesn't it look a lot like that? Come on, man. Come on, man. I need a fucking Nobel Peace Prize. This. Look at this. Look at this. I don't know how I don't understand why I don't have a Nobel Peace Prize. I really don't. This is tragedy. So what are we seeing? Now, it got a little gray in here. I would have called that a stage 1. And this is what we're going to talk about. It's important to see this. It never broke out. So until we get the move above the green line, we can't call it a breakout. It's not a breakout. It's a stage 1 attempted to be made. And you can have it move down, start to go sideways, doesn't do it. Moves down, starts to go sideways, doesn't do it, goes down. That's what a runaway to the downside. You'll have the exact same phenomena to the upside, right? So sometimes it'll do that. Now, other times, you'll see it just do the pattern perfect, man. Sideways up, sideways down, sideways up. I'm trying to think of a good example right now. Yeah, Bitcoin's still holding this box, though. So if I'm looking at Bitcoin right now, what am I looking for? Well, I'm looking for stage 1s. I'm looking for the evidence to tell me the bottom is in. And that usually is the RSI going extreme, price starts to move sideways, and the MACD starts to turn. Exactly what we're seeing right now. Now, today's action doesn't look as good. Now, I just threw that term out there, box. Some people call it a zone of accumulation. You could take it up a little higher if you wanted, I guess, right in there. Don't let these little, what I call kangaroo tails, mess you up. What you're looking for is market structure, okay? You're looking for structure, and you can have little bounces out of it and in it, like there's your structure. But you had this little dip here. When it comes back in, it just kind of reconfirms this. That's what we're seeing right here. So maybe it does go down. It goes down. Well, where was it before? 40, right around in here, 41, 42. Would that be crazy? No, it's been there before. Now, if you were trying to swing trade this, what? You got to get out about right there. I mean, you got to have a stop in. That's a swing trader. If you're swing trading, you were trying to catch the swing of Bitcoin, breaking, heading up, breaking out, and then what? First target, second target. If it doesn't do that plan, like you should have targets. So if you're learning the money flow and you're swing trading, you set your targets when you buy. If you're swing trading, but if it swings against you, you get out. You get stopped out. Don't get mad about it. You're the one that put the order in. Don't get mad about stop losses if you put them in. They did what you told them to do. That's good, right? That's the whole point of it. That means your system worked. Because the backup was, if this drops on me, I want to get stopped out. And it did it. So why would you get mad about that? That always confuses me. People get pissed about a stop loss. Well, then don't put it in. But and I've seen it that way, man. They're seeing that loss as a bad thing. It's not a bad thing. That's your system. Your system is designed as swing traders to take losses. And you might take 10, 20, and you can still have a very effective system. If all your positions start turning on you, you're going to get stopped out, all of them. But if you're not doing that, now here's how you know you're not a swing trader. When you have pressure on you because of the swing trades. It stresses you out, or you get weirded out, or you get upset, or you don't like, that's probably not for you then, right? It's not something you need to toughen up for. Like, if you feel like you got to toughen up, you're probably doing the wrong trading strategy. You understand that, right? If you're like having to have fucking pep talks with yourself, going looking in the mirror, like like this is so against your nature, maybe you're doing it wrong. Maybe that's not the sport for you. If you're 5'2" and can't dribble, maybe it's not basketball. Maybe it's shot put or badminton. Or maybe, I don't know. Maybe it's backgammon. Maybe basketball's not it. But if you're 6'2", really slender, maybe golf is something for you. Meaning we have natural attributes, man. Some people are, they're fast talkers, fast movers, then they probably would enjoy swing trading. They like that action. They want to get in, get out. If If you're like me and you like value and you're a patient person, I'm patient. I actually like it when everybody gets fucking nervous and scared. Like, good. Shake them up, man. Shake out all the bitches. Shake them all out. That, as far as I'm concerned, shake them all out. Shake it down. Take it down. Take it to a fucking dollar. The whole stock market. Take it to $1. I'll borrow against all my properties. Buy shit tons. Once you've come to that, like, you get what I'm saying? Like, so we're no longer being shook up. We're no longer being surprised. Like, I'm here to accumulate. So once I became real clear what I'm doing there, once I'm real clear what I'm doing, then good. We need volatility. Volatility is how you're going to make your money, not going up. If it just goes up, 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 guess what's coming? A really big crash. It's not what you want, man. You want it going sideways, swinging up, pulling sideways, swinging down, coming sideways, and just grinding higher. And I'm growing wealthier. That's what I like to see. That's not what most people like to see. That's not what they want to see. Now, I am happy. In our group, anyway, a lot of people get excited when Bitcoin comes down. They like that because they want to accumulate. Now, not all the people do, but... So that's Bitcoin, watching the pattern. Now, to make a case, and I don't care how you trade, the money flow applies. I don't care what it is, bonds, REITs, Bitcoin, gold, applies to everything. Prices move in 4 stages. I don't care what it is. It's fractal. And what do I mean by fractal is it works on any time frame. I mean, the money flow itself is fractal. The money being purchased, play the game is fractal. The moving averages are fractal. There's 5 days in a trading week. The trigger is the 5-day exponential moving average, right? There's 10 days in 2 weeks right there, 10-day exponential moving average. If the 5-day was to cross the 10-day, that would mean the average price of the last 5 days is higher than the average price of the last 10 days. Think about that. So there's logic to these numbers. Well, why is there a 20? Well, there's 20 trading days in a month. What would happen if the weekly was higher than the last 2 weeks and the last 2 weeks was higher than the last month? And all 3 were numerically aligned, 5, 10, 20. What do you think happens? Price goes higher. It's not arbitrarily picked, man. The numbers are fractal because the stock market's fractal. How many days there are in a week? It's also fractal in nature. You could buy 1 share, 10 shares, 100 shares, 1,000 shares, or 1,000,000 shares. It'll take all the money you want to give it. It is a black hole that will suck in all money. There's no limit to it, and there's no minimum. They'll take it. You got $1, they'll take it. Now, what price is trying to do is it goes through the 4 stages of discovery. That's what it's doing, price discovery. Every day, price is trying to discover true value. What's this worth in relation to everybody's emotions, and what's it worth in relation to where all these factors are that we're looking at? Taco. Taco was taken private, or not private, but it's being purchased by Jack in the Box. It's a black hole, sucking it in. These shares will go away, and they will go into the Jack in the Box vortex. They paid $12.53 a share. What was our target? It was like $12, $12.50 to $13. Why? That was true value. So, on this stage 4 decline, I did not sell my shares. Why? I'm trying to accumulate shares. So I want to use the volatility to my advantage. This is hard for me to fucking sell to people. Yeah, but we're down like 40%. You should cut your losses. No, I shouldn't. I should look for a way to buy more taco. I don't know how I'm going to do it. I don't know what stock I'm going to do it with. But if I'm running a bunch of different stocks, some are going up, some are going down, my job is to manage it. I have no interest in selling this. My only interest is in accumulating this on stage 1s. Meaning that was the game plan when I bought it. I want to use all sell-offs as volatility to my advantage. And I want to wait for it to stop and go sideways, and then I want to buy some. Right? So let's go over here for just a second. Now this played out exactly like it's supposed to. Let's see. think I had it a couple times too where we didn't have it on here. Let's see. Where's the last? All right. 11.8 is one of them here. Adding to taco. Oh, here's another one. And 11.10. 11.8, 11.10. I'm adding to taco. All right. Let's look at taco. 11.8. What was going on then, man? Let's see. November 8th. So I'm trying to play a breakout here. I bet we bought before that too. We had to have bought over here. Got it on 11.8. See, it cuts off down here. Shit. Yeah, we sold taco. We're out. It's over. My point is, it went to what was true value. And as long as it's under this, and I believe from my research that this company's worth this, which I did. Now, I didn't know it would do it in one day. But my point is, it proves the theory. That is the value. So they know how to do mathematical calculations and determine the true value of a company. That doesn't mean it's going to go there. It doesn't mean it's going to go there anytime soon. May not ever go there. Meaning, what do you mean? It means it trades below value. That's what's called a value trap. You'll hear phrases about it, a value trap. But what the money flow allows us to do is to pinpoint, and let's just look at this. If I'm in the business of buying stage ones or breakouts, what am I wanting to buy? I want to buy here, right? Well, in here. I want to buy lows, man. These are stage ones. Boom, comes down. What am I doing? Nothing. There's no stage one yet. And then boom, game's over. That one's closed out. 60-something game. 60-something%. Here's your money. Game's over. Well, if it had climbed here on its own naturally, game over. You got to take that money and move it on, man. If you're position trading, meaning your position is realized its full value. Now, often what I start doing, and you'll notice this window will expand. I mean, once it's within 10 or 15% of this value, this is getting less interesting to me and less interesting. So as the price runs through stage 1, stage 2, stage 3, oh, here we go down again. Oh, stage 1. Wait, that one's going to be a double stage 1. Down we go. And then and then it goes sideways, stage 1, and I'm like nibbling. What am I playing for? Up here, man. I'm playing for up here. That's not swing trading. That's not breakout trading, right? That's position trading. That's different. That ain't for everyone either, man. And yet you can have all these different things going on all within the same money flow, man. It's how do you want to interpret the money flow? What is your plan? And I would highly advise you don't buy a stock if you hadn't thought that through. Because if you're just buying and like, well, let's see what happens. That's the opposite of a plan. Anytime you're seeing what happens means you don't have a fucking plan. That's why you're seeing what happens. So if you learn this, accumulation, markup, distribution, and set rules for yourself, right? 5-day, 10-day cross, I sell some. Let me give you an example. Let's say, this is the Dow, but let's say you're buying just breakouts. That's it. Boom. You might have bought that one, but let's go with this one. First target's what? Always previous high. Boom. I'm taking some down. Next target, RSI Extreme. I'm taking some down. When these start to roll over, if I'm swing trading where the goal is to get out of this shit, then I need to take it down. Look, why? The indicators are rolling over, man. So look, down, 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 down. Right? If you're position trading, You probably already took some off. There's nothing to do. Let it come down. Why? Because we're going to put it back on. What we took off here and here, we're going to put back on and keep playing that until it gets to true value. But if I'm swing trading, I need to be in, out, and totally out. And then I'm out, letting it come in. Don't write it down if you don't like to write it down. But you gotta set rules for yourself, What's the ETF you follow the most? I follow all of them, bro. All the ones you follow and then 100 more. I follow the big 6 right here. So let's back this up. So this is my trading log, right? These are the things that I'm looking at. See where it says market status? So I'm looking at these every day. Where's the S&P 500? Where's technology, QQQ? Where's oil? Where are bonds? Where are Bitcoin and Ethereum? And, and then the next level down, ARK funds, blah, blah, blah. When you go through that, when you wake up every day, when you wake up every day, you want to run through those. Where's the SPY? This is the wind, bro. If that's not going up, your stocks aren't going up. I mean, a few of them might. Money flow is fractal. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over and over again in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. Geometrically, they exist between our familiar dimensions. Fractals, well, we won't get into that. So the pattern becomes repeatable. The same thing over and over. That's the pattern. The only thing that makes it work for me is having clarity what I'm doing. And if you're doing multiple things, in my experience, it works better to have it in different accounts. Like I hold my crypto in crypto accounts. I hold my trading stocks and trading account. I hold my buy and holds in a buy and hold account. If you mix them, it causes you to make bad decisions because you're not able to change hats. So, big down day, you don't have any money to add to your buy and hold. There really ain't even no reason to log into it. You just look at the chart. You don't even need to see the price. You don't even need to log in if you're looking at the chart, right? There's nothing for you to do. So as we watch price, it's going to do one of these 4 things. Go sideways, run up, go sideways, run down, go sideways. It's going to do one of the 4. So any stock you're looking at, you can tell. And we use these moving averages and this and that. It ain't even about that it's the 5, the 10, the 20. I use that because the system is fractal. If a 1 week average price is breaking above the last month of trading, that's important to me. I think that's huge. That's the moving average crossover. But it's not even about crossover. It's that the alignment of the moving averages have now changed. That's what the crossover is about. It's not the fact they're crossing. And the RSI, all it's doing is just gauging the possible momentum left in a trade. Because when there's only so much money in the world, and there's a limited amount of money that can push anything up. And so they can only go so high, man. And that's what this tells us. This kind of gives us a little tip. Hey, we're running out here. It's gone too high. And almost always an RSI extreme reading will be at these tops. So the RSI will go plus 70, and it'll almost always be, if you've done my getting started with stock charts, I call it an anchor point. Same to the downside. So your anchor points are going to come here and here. And those are almost always your extreme lows and extreme highs. And so what the RSI is trying to help us do is just identify where a stage one is, or where the possibility of one starting is. But then we want it to go one step further. We can't do it on one day. So when I always, like, if the stock will drop big, and I'll get DMs like, hey, what do you think of this stock? And I'm like, read the fucking book, man. If you would read the book, you would know what I think. Read it. Wait for the box. And the moment you get this, and it just becomes part of how you see stocks, that they drop, and there's no rush. Once they've started a stage decline, they're going to keep going. It's going to go for weeks. Could go for months. I'm guessing we have new people on here that are actually talking to me while I'm giving my class. Don't ask me questions, bro. It's greedy. So you want me to stop the class to answer your question? Here, sir, we'll stop the whole damn Sunday service to answer your question. Just come in church, raise your hand. Hey, I know you're giving a sermon and all, but could you answer me a question before we continue? So, see, now you done ruined the whole service. The 2 and the 4, we don't know where this is going. We don't know where this is going. We don't know how long stage 2 is going to last. It's going to last more than a day. So when you see it break down, here's an example. Right here. And I see this, and I say, well, the definition of a stage 2 breakdown is price closes below the 20-day moving average and begins to drift down. And where do I assume it's going to go? Well, I assume it's going to go where it's gone before. And that's just any place where it had stopped before and put in a box. You're going to see them. You know, they're not perfect. Looks like there's one right in here. Maybe you'd give it up into here a little bit. And we see that. That's exactly what it did on the SPY. If that one breaks, I assume it goes to the next one. And if that one breaks, I assume it goes to the next one. What does that do? It gives me a little order. It gives me a set of rules. I'm not just winging it. But the reason I came up with these is how often it happens. It'll drop, stop, start to go, and then you'll see it run. So you saw it here, right, where it stopped, where it had stopped before. If we look at the Dow, what we were just looking at, where is it? Where's the Dow? It's Bitcoin. Same thing. Came in, stopped right where it stopped before. And so when it moves up, I'm assuming the same thing. When it goes up, it's going to go to where? Where it's gone before. So if we're over here and the breakout happens and it runs up, I'm looking left. Wherever it's stopped before, I kind of assume it's going to stop again. And I boom, there's my first profit target. Now, it may keep going. Good. So we just sell some. 20%, 10%, whatever rule you want to make for yourself. Depends on how much money you need. Usually a smaller account, you probably need to take more off because you need money to roll it forward into other trades. So once you have a trade working, you want to downsize it. The higher it goes, if you downsize it, the less risk you have. Because when it finally does start to go sideways, starts to roll over, you've taken profits off as it moved higher. And so we want to set at least 2 profit targets. One being previous high, which if we're looking at the Dow, previous high is where? And I mean, come down a little bit, be right around in here, right? That's previous high. So we'd have a 36 target. Well, guess what's probably going to happen? The RSI is going to bang too. Doesn't it look like it? It's almost like I've done this before. So when it stopped at the previous low, what was up with the RS? It went extreme too. Isn't that weird? Isn't that weird? You've never been a trader. You're a trader. You just don't call it that. Because if you die tonight, they're going to trade your shit. Let's see. Everybody's a trader in the end. But if you're a buy and holder, my friend here is a buy and holder, does it make sense to you? Let's say you're a buy and holder. I'm a buy and holder too. And I trade some and I position trade. But doesn't it just seem to make sense that if we can look at charts and see a big sell-off, if we then can create a method for trying to create like a box and buy when the price set up in that, to where we're always buying after big sell-offs on a sideways move. That just seems like over time as a buy and holder, if you could time those, what they say you can't pick bottoms, which of course you can. That's ridiculous. Might not be the bottom. You can buy all the bottoms, meaning all bottoms look the same. They stop dropping and they go sideways. In the moment they go sideways, I only need 4 days of sideways moving up, then I'm good. I'm in. You say, well, what if it goes down again? All right. If I'm buying and holding, that doesn't matter. But what this allows me to do is to begin to time my buy and holds. What else could it do for me? Well, what if I wanted to trim a buy and hold as a way of locking in some gains, like I've had one do really, really well? Well, what you want to do that into strength, right? Wouldn't you want to do it into tops? And you say, well, how could you know when there's a top? Well, I don't know, but I know what a lot of them look like. The RSI goes extreme and price starts to go sideways. So if I wanted to trim something, I don't want to trim it here. I want to trim it here. I don't want to trim it here. I'd want to trim it as it moves higher. So if this goes extreme, there's your trim spot. So then you're selling into strength and buying weakness. Right? I mean, that's the philosophy of the money flow. Oh, man. See, if you're a buy and holder, this can make you rich. Because you're not blindly buying. And you already said you don't give a shit if it goes even lower. You're a buy and holder. So think of the advantage. You say, well, you could just buy. Okay, but can we just step back a second and let's just pretend that you randomly bought and you bought all these. Now, you're still going up, right? Technically, that is still has gone up. But what if we buy the same stock and I just buy the stage ones? Right? I just buy stage ones. And I'm a buy and holder too. I feel like I have an advantage. Mm-mm-mm. Hmm. Hold on just a second. man says Apple's about to push hard this week. Unfortunately, you don't actually know that because you don't actually know shit. You have no idea what's going to happen. You're just guessing. And if you could know that, now you're saying it's going to push back, pull back because of the maybe, might keep going. But yeah, I would not be buying it. But that little comment there, I always have to remind myself of that. I really don't know. And I got to be cool with that. But what I do know is that quality companies over time go up. And so if you combine stock picking skills with technical skills and you bring them together, and you can outsource some of this, right? We can outsource some of our fundamental research, but we can use our common sense about the things that, we use. Yeah, this Apple chart is beautiful, man. What do you think is a good time to buy Apple? Doesn't that look good? Stage 1, right? Moving averages move under, price moves down, down, down. We start to come together. There's our support. Never got extreme, though. There's our breakout. What? Do you really, man? Says, I live on the end of Bourbon Street in Frenchman as well. Really now? I live on Burgundy, brother. Buy with the stock very soon. Oh, buy with the stock very soon. If you really do, man, contact me. I don't meet many people on here from there. I doubt you do, though. Let's see. Yeah, this has been amazing. I don't know who the idiots are buying this right now. This is the exact opposite of what you buy. Do not buy this. You should be selling into this if you're a trader. If you're positioned, you can just ride it at this point. You probably should have already taken your profit here and there. Now you're just riding it out. But this is not at all what you buy. It's already, you've missed your window. The moment this starts going green, you've missed your window. Don't mean it can't keep going for a while, but it's a bad habit to buy. It's a bad habit. Oh no, they're too lazy to click the like button, bro. I could have 10 million people on here, there'd be like 42 likes. Because then they'd have to actually push their thumbs. Most people on YouTube, to be fair, are doing it on a TV, so then you'd have to pick the remote up and you'd have to move it. In today's day and age, who wants to move a remote with your hand? It feels so hard. I'm just teasing. Yeah, man. We've wrapped the class up there. I won't babble on and on like I usually do. But the money flow, the money flow is that, man. That price moves in 4 stages. That I just believe some basic fundamental shit that over time quality assets go up. That over time the in general stock market goes up. This is the Dow Jones. It has periodic moments of sheer fucking terror. Those are rare, like we saw in COVID. A 20% drop is rare in the stock market. Not rare in Bitcoin. That's called Friday night. So obviously different classes of assets have different characteristics. And one of the things that I've tried to encourage people with my content and with my teaching is that you should own different types of assets. And that your goal isn't to move out of all of one and into another and out of another. Some people can pull that off, and I'm sure you can find points in time where that worked. What's worked for me is owning lots of different assets, targeting the one that was the best opportunity for me, and often holding the others. That could be oil stocks. That could be Bitcoin. That could be a rental property. That could be loading up on, because I think Uber is ridiculously cheap. It could be any number of things. And it doesn't mean I have to get rid of all my other things. So I don't sell all my stocks to move it all into crypto. I'm doing this for life. I don't expect one particular asset to be what sets me up for all of my life. That is a juvenile, naive way to see investing and see the markets. It's not going to be one thing or one asset. It's not going to be one trade or one stock. It's going to be a lot of these, a series of these. One property is not going to make you a millionaire. It's multiple, lots of properties held over lots of period of time. Trading, if you want to trade your way to $1 million, it's going to be lots and lots and lots of trades and different market cycles where different assets are working. And sometimes it's this and sometimes it's that. And so if you're a position trader, you have to be willing to focus on those assets that are, if you're a swing trader, you might switch from this to this. But if you're position trading, you want different positions in all different types of things because different things get hot at different times. And I want to pull from these assets doing well to help me add to these over here. And that's position trading, man. That is position trading, man. Friday night, nice one, GP. Sparrow said he got out of Insta to give a like on YouTube. That's very, very kind of you, sir. Very kind of you. If you live on bourbon, bro, hit me up. I don't believe you, though. Nobody wants to live on bourbon. That's not true. There are a few houses there, but month-long mask mandate in New York starting tomorrow. Hopefully it's short-lived. Really? You guys are back to putting masks on? Huh. All right, man. I appreciate everyone coming in. If you haven't, you can go to my newsletter. I try to keep it up to date. It'll get days behind. If you're in our Discord group, whenever I make moves, I put them to here, but it could be a day or two before I do that. Sometimes maybe more if I get busy. I'm logging them. I just don't necessarily upload it to the internet. So this changes most days as I make moves. And I kind of do this to encourage people to do their own. You should have your own. And like one of my trades of the week, SOXL, somebody asked me to look at that. We'll look at that real quick. You should be down to half a position in this. This was one of my trades of the week. If you remember, I've been pretty good on these trades of the week the last few weeks. It's been pretty hot. Yeah. So we were buying the breakout and what? Sold it into the stage 3. And so now we're in a stage 3. So if you follow the money flow, that was stage 1, stage 2 breakout, stage 3's in here, and now I'm at half position. So because I'm at half the shares that I had twice as many shares here as I have here. What is that? Selling into strength, right? And this is a swing trade. So at some point, I'm going to get out of this when this breaks. And there's no cry. If it turns and goes right back up, oh, well. That's swing trading. I mean, once you flip a house, you don't own it anymore. It's gone. It's not yours. You don't get to go back and look and go, oh, man, they sold it for more the next year. Of course they did. Every time someone flipped a house, it was worth more the next year. And the next year. That's how it works, man. So if you're swing trading, you don't worry about that. Get your money, take it down to half. If this breaks, we get out. And if it comes back in the box, well, we could do game back on. Let's see. Yeah, that was the trade of the week. Let's see. I don't know why I still have this on here. I think I updated the old one. I got to take that off. That's it, man. Zynga's on my list this week. I'm watching it real close. I got a nice size trade I'm building in this one. We'll see. I didn't do anything Friday, no moves. I didn't really care for the market. Just felt like a lot of short covering, a lot of hedge funds cleaning their books. It just didn't feel right, so I didn't want to make any moves. We opened down big, then we know we got stage 4 declines again. I feel like we're probably going to open up in these runs, and I'm looking at a 750 target. And then if we get up into $9, that would be great. So on Zynga, you might put a stop on some of it in here. I don't have a stop in right now. First target, second target. This thing is way undervalued. It's worth about $12 a share. I don't know if it'll get there. Same concept, what I was doing with Taco. Once these ones become ridiculously cheap, and I think they're legitimate businesses, and they're way undervalued, now I start to position trade them. I mean, I want to build this up. I don't want to sell it because I really do think it's worth a lot more money. If I don't believe that, then I wouldn't keep staying in it. So that's it. There's no check out Z. For what, man? You know where Z is. We just did the whole class. You should know where Z is. Stage 2, man. Stage 2. Price is above the 20, 5's above the 10, 10's above the 20, MACD's on a buy, everything's on a buy. So just, Friday, all growth stocks sold off, so we'll see. It'll probably come right back tomorrow. Yeah, I'm bullish, man. Anybody's negative, I don't know what's wrong with you. Something ain't wrong with you, man. Maybe your uncle I don't know. Maybe your uncle did something to you. I don't know. I like the market here. I think it looks good. I think it's bullish. The S&P's breaking out. Dow's breaking out. Bitcoin's coming down. That's good. I want Bitcoin to come down. Let's bring it down a little bit. I've been building a nice swing trade in DOT. Ooh. So this is a swing trade in DOT. Lit says love Z. Sup, Rich? Dude, look where this stopped. Let's just look at this for a second. Look at this. Isn't that crazy? I mean, right where it stopped before. I don't know if it's going to hold. I'm betting it is. It feels cheap enough here to take a shot. And obviously everything else was setting up nicer. Bitcoin selling off right now isn't making me feel very good about this right now, but sure feels like it wants to run to me, man. Sure feels like it wants to run to me. Hey, hope I can help you. That's the newsletter. If you don't have the book, get the book. That's it. You guys be good, man.